Hello, this is Matt on the Moon Lambo channel. I'm going to share with you supporting evidence indicating that the price of XRP can go way higher than what we've seen to this point. Because right now, a lot of people in the XRP community are genuinely wondering if this market cycle is already over. We've seen volatility, we've seen fear, we've seen a ton of analysts suddenly flipping bearish, that's for sure. That's the popular opinion now, to be bearish. But before anyone throws in the towel, I want to show you something extremely important because the macro data we just got does not support the idea that we're entering a bear market. In fact, new data points exactly to the opposite. It has everything to do with macro. Because look, XRP does not live in a vacuum. It moves with global liquidity. It moves with the business cycle. And it moves with risk on flows, just like the rest of crypto. So if the broader macro environment is indeed turning up, as I certainly think it is, and just hang with me, you're going to like the evidence, I think. And if Bitcoin is already pricing in far more bad news than reality supports, then the implications for XRP are massive. It means this cycle is not over. It means we're not starting a bear market. It means XRP could have much higher prices ahead once liquidity expansion kicks in across the entire crypto market. So what I want to do in this video, this latest Moon Lambo hot jam, is walk you through the newest evidence that global macro analysts are watching and show you why this indicates the entire crypto market is probably gearing up for its next major leg higher. And not that it has to be today, tomorrow, next week, next month, but that there is proper positioning to believe that's what's probable to occur. And I'll tell you this, if that ultimately happens, XRP historically follows. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. And you do love seeing XRP back above $2. It's at $2.06 as I record this. Bitcoin back above $87,000. So maybe this will persist higher. Maybe the bottom's already in. There's also a possibility this is just a relief rally. And you could see some more lows before things finally bottom out. I'm really wondering if that market maker that was wounded has finished distributing. It's reasonable to speculate that might not be for a couple more weeks. But either way, that bleeding is going to stop. And I've talked about that in recent videos. So if you don't know what I'm talking about, sorry, it's too far outside the scope of this video. But it is a major consideration when you're trying to figure out if we're at the bottom, and I just don't know if that's the case yet. But either way, the rest of what I'm sharing in this video, it absolutely matters. Regardless of when we bottom, the data I'm about to show with you is true regardless and matters just as much regardless. But take a look at this post. This is from Cryptos R Us, a very popular YouTuber, actually got actually close to like 900,000 subscribers. About 300,000 on X following him, and take a look at this. Take a look at this chart. It's a thing of beauty. A Bitcoin relative strength index weekly, and I'm highlighting this so I know that most of you are probably like me and you care about your XRP way more than Bitcoin. You care about XRP and the rest of your altcoins. I'm with you, but I still every single day track what's happening with Bitcoin because the way Bitcoin goes is a strong indicator of what's going to happen for altcoins. That's the real reason that it matters to me, to be honest with you. And it's fun to watch when you've got skin in the game, honestly. Being in crypto, it's like sport to me. I don't know how you guys feel about it, but to me, it's just a fun. Always having a blasty blast. But anyway, so here's what he wrote. Bitcoin oversold relative strength index, RSI, hits 35. And you can see what he's talking about down here. The RSI is this bottom line down here. And of course, the yellow line up top is the price of Bitcoin. So you can see it's in the gutter right now. RSI is in the gutter. It says Bitcoin has entered oversold territory with the relative strength index dropping to 35, only the 6th time in its history it has reached this level. And historically, major rebounds have occurred when the RSI falls between 25 and 35, putting Bitcoin right within that critical range. The current pattern closely resembles the March 2020 market crash, where the RSI bottomed at 33, just slightly below today's 35. Fear doesn't last, conviction wins. Yes, spot on. And here's the 2020 crash from the pandemic, right there where I'm moving my mouse. I remember that. I was there. I know a lot of you listening were there. It was the end of the world. That's how it was reported anyway. And I gleefully bought. That was the moment in time where I bought XRP for the cheapest I ever bought it. I bought it for 15 cents. And I talked about it on my channel at the time. I was just backing up the truck as people were freaking out because I knew that didn't mean it was the end of the world. Stock market was down a lot too. Of course, then money printer go burr, and then, well, the rest is history, inflation and all the rest. But a lot of that money ended up in risk on assets, including crypto, obviously. But do you see how it's the same freaking thing? RSI down, fell off a cliff. The price of crypto, Bitcoin, XRP, just fell off a cliff. XRP dropped as low as 10 cents. That was the cycle bottom, by the way. It then rallied to $2 despite the SEC attacking. That's right. That market cycle, last market cycle, XRP went 20x, 20x. That's right. While the SEC was attacking. So it's kind of hard to believe that this cycle is going to be worse than that. I mean, now fine, we already did get a higher, a new all-time highs this cycle, but I just, comparing, just putting things in perspective, it's kind of crazy to think that that's all we get, less than a twofold increase compared to the last cycle. I doubt it. That doesn't even make logical sense. But look, it is short-lived, and it is the case that markets get oversold, and eventually things turn around. I have a very difficult time thinking that the cycle's over right now. And there are things that could persuade me, but they have not happened yet. And then there was also this post from Quentin, popular analyst, and he said, Bitcoin bottom signal. Exchange outflows just printed one of the largest spikes in history. Every major outflow event on this chart marked the start of a huge leg up. Okay, so not only do we have Bitcoin oversold, as I just showed you, and markets do find bottoms, please keep that in mind, all sorts of people, businesses, institutions, are taking their crypto off of exchanges and putting it into cold storage. Look at this massive spike. It's like the biggest in history. And this happened after, this is a key point, it happened after the price of Bitcoin started plummeting, after it had already cratered. Think about that. Because when you take your Bitcoin off of exchanges, that's because you don't plan to sell it anytime soon. And that happened after all of this price crashing. Not before. It didn't happen before. It's not like they took it off exchange and then the price started crashing like, oh crap, I wish my Bitcoin was on exchange. I could easily sell it. No. It happened after. This is the behavior that you see when people don't want to sell. This is not what you see if people are like selling right now and the market's just going to tank way, 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 way lower. That is not historically what happens. Just more evidence. And then we have this. This is a post from Julian Biddle. And Julian is the head of macro research at Global Macro Investor. So he's working directly with Raoul Pal, who is the founder and CEO of Real Vision and Global Macro Investor. And Raoul Pal is the reason that I am aware of the importance of global liquidity and how it correlates so closely, almost 100% of the time, with the crypto asset class. He's the reason that I understand the importance of the ISM and the importance of the business cycle metric. And see the post here, it's been viewed a lot of times. This has been viewed 266,000 times, and it was posted just several days ago. And I don't think that it's particularly intuitive for a lot of people that would come across this, so I wanted to break this down a little bit. But this is, frankly, one of the most bullish things that I could possibly show you. It's real-world data, and I'm telling you, so like there's a reason that the 4-year cycle has been a 4-year cycle. And it's not that there's something magic about the number 4. It has to do with the underlying metrics that make that number 4 happen every 4 years, or at least has up to this point. And so it's not that this time is different. It's that the metrics, the parameters of the specific metrics that resulted in 4 years, if Raoul Pal's right, are now resulting in 5 years. But there's been no change there. This time is not different. I mean, you can say the timing's different, but when people say this time is different, they mean there's a fundamental change. And what I'm telling you is that Raoul Pal's thesis and Julian Biddle's thesis is that there has not been a fundamental change. Therefore, this time is not different. 5 years instead of 4 years if they're right. But there's evidence to indicate that is the case, and that's why I'm highlighting this. And so the reason this chart is so exciting for anyone holding crypto is that it ties Bitcoin directly to one of the most important macro indicators in the world, the ISM Manufacturing Index. And so that's the black black line, and then you've got the pink line is the U.S. Empire State Manufacturing Survey. So ISM, it stands for the Institute for Supply Management, and every month they survey purchasing managers across the entire country. And these are the people inside real companies placing orders. They're managing supply chains. They're hiring, they're firing, they're doing all the stuff, right? They're doing all the stuffs. They're dealing with real demand. So the survey, it measures all sorts of things like new orders, production levels, employment, supplier deliveries, so on and so forth, and inventories, all of that gets rolled into one number that tells you, in real time, by the way, whether the economy is expanding or contracting. This is a real intuitive way to understand what's happening right here. And you can understand like all the things I just listed: hiring, firing, orders being placed, all that crap. Yeah, so that tells you if the economy is expanding or contracting. Might that matter for investments? The answer is yes. And above 50, that means expansion, and below 50 means contraction. And ISM is one of the most reliable business cycle gauges on Earth. And Bitcoin has a very long history of moving explosively when ISM bottoms and then starts climbing again. That's historically the norm. And that's why this is exciting. See, that is exactly why Julian Biddle's post right here is such a big freaking deal. And I wish more people were talking about this. I'm glad a lot of people have seen it, over 250,000 people, but I wish more people were talking about this. It's a bigger deal than people are giving it credit for. So Bitcoin, even at 91,000, is actually pricing in an ISM reading around 46, okay? Which means the market still thinks the economy is weak. And so I know the price of Bitcoin has come down since then, but it's factoring in that price. It means that the market still thinks the economy is weak. But the newest data right on your screen here, the Empire State Manufacturing Survey, and again, that's the pink line on your screen, it just blew past expectations, and it jumped very sharply to the upside. You can see right here. I move my mouse if you're looking at the screen. Look at that, just rocketed up. Now the Empire State Manufacturing Survey it's one of the earliest monthly snapshots of economic activity in the United States, and it focuses on manufacturers in New York State. But despite being regional, it's extremely important because it tends to move ahead of the national ISM by roughly a month or two. That's just historically how it's behaved. And so it tracks things like new orders, shipments, employment, and really just overall business conditions. In many ways, it's very similar to the ISM. That's why the two are being compared here. But it gives an early read on whether manufacturing is accelerating or slowing down. It's ahead of the ISM, okay? So when the Empire State Survey makes a big move, especially a surprise jump like we just saw, it often signals a broader turning point in the business cycle before the rest of the country's data catches up. And so that's why analysts like Julian Biddle are watching this thing so freaking closely. The Empire State Survey really is, consistently one of the early indicators that led to an uptick in ISM by a couple of months, very consistently. So when it rips higher like this, which you can see on your freaking screen, it's very frequently the first real confirmation that the economic cycle is starting to turn back up. And look at this correlation. So it looks like, so this is a zoomed out chart going back to 2002. And so if you look this zoomed out, you can't see what leads what just because of the nature of being so far zoomed out. But I'm telling you, it's more obvious towards the end of the cycle, towards the end of the chart here. But it clearly is. It's clearly moving to that. It's moving first, and it moves first. Even so, again, I'll say it again. We're zoomed out, so it's hard to see. I'm telling you, the data shows. If we were zoomed in, it would just be more granular, and you could see it. It is the case that this thing leads almost all the time, and so that's why to see this is so exciting. It's incredibly bullish for crypto. Bitcoin holding at a respectable price level. I'd say, all things considered, I know it's down a lot, but it's moved up in recent days. But just be holding here, while pricing in while pricing in an economy that still looks bad because on paper, because that's what it's doing here. If the business cycle is actually bottoming right now, and the data strongly suggests that it is, frankly, then Bitcoin and the rest of the crypto market is about to reprice to reflect improving conditions. That's the key takeaway. And historically, when ISM moves from contraction back toward expansion, liquidity flows into risk-on assets like stocks and crypto. And frankly, crypto leads the charge. So, I mean, it's just so, and this is why, the chart guys that are screaming we're in a bear market, I'm like, are you looking at macro? Are you looking at macro at all? Because, it's not the case that all of this money that's floating around the crypto space just whimsically does it for reasons that can't be understood. This is it. It's global liquidity, and that impacts ISM, which is a component of business cycle. And I mean, I keep showing you charts. I don't have a pull up for this video, but I keep showing you charts. TechDev highlights it all the time. How we're at the bottom of the business cycle, and markets have only peaked at the top of the business cycle. And it makes sense. I mean, just explain this to me. If liquidity is going up, so liquidity is already towards all-time highs. And we know that it's almost certainly going to continue trending upward. Why then would you expect that a certain amount of the increased liquidity would not flow into risk-on assets, especially given that the economy is not in the shitter? Tell me the rational reason. Don't give me all these just metrics about charts. Tell me why that logically doesn't make sense. I want to know. I don't see it. If you have a compelling argument, then you can persuade me. Show me the argument. Because right now, what we're actually seeing is a leading indicator that things are actually looking good. They're actually heating up. And this is what precedes massive moves. That is why I'm taking the time to break this down with you. So you've got a setup where early economic indicators are obviously turning up, and Bitcoin is undervaluing that improvement, obviously. Most people have no idea what I'm telling you. Almost no humans know what I'm showing you on the screen right now. And the macro environment that fuels massive crypto rallies is forming under the surface. It just is. That's why this should get people excited. Underneath the surface, things are heating up in crypto. It hasn't even begun to price that in yet. So yeah, I do think that the best is yet ahead. And if that means we have to wait even over half a year for it, fine. If we have to move roughly sideways, maybe go down a little bit more, fine. But unless I get very serious confirmation that higher time frame charts are broken from tons of reputable chart analysts that I follow, I'm just not convinced. I'm not. And look, if the analysts that say we're in a bear market are correct, then we should not expect to see new all-time highs for several years from now. But if the analysts that like Julian Biddle here and Raoul Paul, if they end up being correct, then yeah, you're going to move sideways here. And some people are still going to scream we're in a bear market. But if they're right, you are going to see new all-time highs probably in the side of the next 12 months. Not just that we'd rebound within the next 12 months because bear markets only last year anyway. But what I'm saying is if Julian Biddle's correct and Raoul Paul's correct and TechDev are correct and their suspicions and their thesis, you're not just going to see us end a bear market inside of a year. You're going to see new all-time highs and a new parabolic surge inside of a year if they're correct. Roughly, and nobody can perfectly predict time. I'm just saying it would probably be roughly something along those lines based on what we know about liquidity, where it's likely to go, and understanding how far behind Bitcoin and the crypto asset class lags behind it. So it's more of an educated guess than any of them knowing for sure what's going to happen. But that's why even going back to it was either the end of last year or early this year when I started sharing this thesis on my channel from Raoul Paul, and it was not popular back then. It's a bit more popular now. But that's why even back then, he was like, guys, this actually might go into second quarter of 2026. And that was a long time ago. But he did not arbitrarily just say that for the lulls or, for the engagement or anything like that. It was based on data. And he couldn't know exactly what it would look like because he needed more data. Like we're seeing more data unfold right now. But he could see, even back then, that debt refinancing, because of the pandemic, had shifted from 4 years on average to 5 years on average. The reason for that is being in the pandemic, interest rates dropped to zero. So when businesses refinanced, they refinanced for longer out so they could take advantage for a longer period of time of the 0% interest rates or rates that were close to zero. That's why it makes all the sense in the world. And there are some firms that were able to refinance out even further, like 6 years. So it averaged out to 5 years, and he could see that, like a year ago. And that's why once he recognized that, he understood that it was the debt refinancing, he well understood is the debt refinancing that caused the 4-year cycle. So he's like, okay, well, debt refinancing, that's not changed. It's still going to keep causing the cycle. But now, since the debt refinancing has moved from 4 years to 5 years, there you go. And that also impacts, it all makes logical sense here too, because when you're talking about the economy and orders coming in, the debt refinancing change, that is what impacts money flowing through the entire goddamn economy. That is what it is. So of course, when you see an uptick here, it makes sense. As liquidity increases, don't you think it's going to impact, not in a positive way, not just risk on assets, but the entire freaking economy? And don't you think that this is an indicator right here? And because history shows us, like, this ticks up and then risk on asset prices follow this. That's what the data shows us. So if you're a bear, fine, be a bear all you want, but tell me what is wrong with the rationale here. What is broken? I still can't find an argument. Like, I can see all sorts of individual arguments from analysts saying, okay, but what about the MACD on this chart? Or what about the 100-week moving average for Bitcoin? Now we just slam down here. It only happens in bear markets. Okay, got it. What about this thesis is wrong? And why does your individual metric in a vacuum, without considering anything else, why is that a more powerful argument in your mind than looking at the entire picture, which is what I'm trying to do here? It just doesn't make sense. Why would you not use all of the jigsaw puzzle pieces for the jigsaw puzzle? Why do you only use like a few of them? How about use all of them and then come to a conclusion? Do you see what I'm saying here? It just doesn't make sense. And there's rationale for why Bitcoin's been performing terribly recently. It's because of that liquidation event. And I don't want to talk, I talked about it again in too many videos, but that's it. It's forced selling from a market maker. That's what it is, because there's a contractual agreement between the market maker and whoever their lending facility would be that covers situations like this. And it's true in TradFi, it's true in crypto. And typically those agreements, as far as unloading assets, at a roughly even pace, last 6 to 8 weeks. And we can see that it's happening like clockwork during specific time periods, basically every single day. So we can have a high level of confidence that is indeed the case, and we know that's going to end. Which is why I keep saying, even if price goes lower, who cares? It's not going to matter in the end. It does not make sense to be bearish here. Now, if I'm wrong, and if the thesis that Raoul Pal has, and the thesis that TechDev has, and the thesis that Julian Biddle have, if they're all wrong, fine, but tell me why. I haven't seen anybody put forth an argument. I see arguments that don't touch this topic. I see that. I see all sorts of analysts put forth arguments that don't address this, but I need you to address this. I need you to address the macro points here. Why do you think this doesn't work? If you have an argument that's persuasive, I'll be persuaded. I'll even highlight it on my channel because I just want to believe whatever's true. I'm not just going to say I believe something and therefore I'm going to be a stick in the mud and I'm going to leech onto that. I'm going to marry that idea forever. No. If I believe something and it's a wrong or bad idea, just let me know, use logic, data, and reason, and then once you've convinced me, I'll be like, oh, I'm going to stop believing that stupid-ass idea now, and we'll move on. I'll move on. But somebody's got to tell me why first. And I'm certain, mind you, I'm actively searching for a reason that this is a broken idea. I cannot find it. I haven't seen anyone articulate it. So if you find it, please let me know. I'll highlight it on my channel. I'll give you credit, too. I'll give you a shout-out and props. But I don't think, I find these arguments highly compelling. I mean, what do you think? Do you find them compelling? I genuinely do. I really do. I'd love to know what you guys think. I'm not a financial advisor. You should not buy or sell anything because of anything I say are right. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.